If you're the average American, you probably saw a few rent raises in the last year or so.
Yeah, what the heck?
And we're not talking the typical 3% rent raise. We're talking 20, 30, 40. I've even seen 100% rent raises over the last 2 years. So in this video, I expose some new trends happening in the rental world and what it means for you as a tenant. You probably have heard that mortgage rates have skyrocketed lately. And these higher rates have had crazy effects on the housing market. Specifically, if you were to have bought a house at the same price last January versus now, your monthly payment would be about 30% more. And house prices were already somewhat pretty steep, so it's no surprise that fewer people are entering this seemingly exclusive club of homeownership.
Get this loser out of my club.
We've got less people at the country club and more people at the rec center with the kids peeing in the pool. And there are a lot of people who were homeowners before, sold their house to get into a rental because they were trying to sell at the top of the housing market. I had clients myself doing this.
I'm a realtor.
I don't recommend doing this because now these people are likely regretting their decision, seeing that house prices have not come down as much as they were expecting. Go check out my housing market predictions for 2023. So back to rent. With less people buying houses, that means more people renting. And that extra competition means that landlords can charge more for rent. It's a simple supply and demand issue. This has been the case throughout the country from 2021 to 2022. We've seen crazy rent increases. Florida topping out all of the states with a 22.6% increase, and there was only one state that had an increase less than 6%. In the last couple months of 2022, we've actually seen a reverse to this trend. Every winter, we see a decrease in rents. Rent prices are a very seasonal thing. 2021 was the first winter that we did not see an overall rent decrease. Rents just kept going up throughout the winter, at least in most places. But 2022 was a different story. Across the country, we've seen a larger than normal decrease in rent over this winter season. And this is surprising to me because I haven't seen an influx of home buyers. In fact, we've probably seen the opposite. So I put on my PI hat and investigated the data to see what is the true cause of this decrease in rent. It all boiled down to two things. The first thing, which was somewhat expected, is because less people are moving. In 2021 and 2022, we saw huge spikes in moves across the country. As we ended 2022, that started to change. As you would expect with higher interest rates and 25% of all homeowners refinancing their loans in 2021. 25%? Why aren't there more? That's a whole video in itself.
If mortgage rates are at a historic low and refinancing could decrease your payment by hundreds of dollars, you probably should consider doing it.
Regardless, why would someone move and be forced to trade in their 2 or 3% interest rate and trade that for a 6 or 7%? Now, some moves are obviously inevitable, but we're also seeing a decrease in total home sales, which means even those inevitable moves are down.
Wait. What about rent?
The same holds true. Because of these crazy rent increases, a lot of people who are still holding on to those lower rents because, I don't know, maybe their landlord's old and doesn't want to raise their rents. I know plenty of them. They don't want to trade in that super low rent and move to a different place, even if it's bigger and better, because they're going to be paying an exorbitant amount higher. And it's only been recently that landlords have been forced to lower their rents in order to attract those tenants. But even then, the rents are not as low as they were in the past years. The second one, and this one's a doozy, is the influx of multifamily housing that has been flooded into the market in the last year. According to the NAR,
I'm a realtor.
housing starts dropped below the historic average of 1.5 million units. But hold on, check this out. The total number of units under construction is still 1.7 million. The data show that there are more multifamily properties being built than single-family homes, and these multifamily properties are considered anything over 5 units. This is something that I don't think we've ever seen. There is so many multifamilies, and we're making the assumption here that those will be rentals. So there's more apartments and less houses being built, but even the houses being built are playing into this change in the rental market. There's a new trend amongst builders called build to rent. This is basically when big builders, instead of building houses to sell them to individuals, they build entire communities with the plan of renting all of those houses out.
But.
And where are these builders getting the cash?
Oh, that's a good point. That's a good point.
Because builders are a lot like flippers in that they're only as good as their last project, right? They need to sell houses in order to have cash to build the next ones. So I had to dig deeper.
Turns out.
There are massive investment firms backing these builders in order to fund these projects. And with all this extra Wall Street cash, these builders can afford to hold on to these assets and rent them out. Companies as big as Toll Brothers are participating in these projects, and they're targeting major high growth areas such as Florida and Arizona, which coincidentally are the same areas that have seen a steeper than normal decrease in rent prices.
We got him.
If I had to guess what is causing the biggest effect on rent prices, it would be all these multifamily projects. However, those are coming to an end. Building permits are down, and I don't think this trend will continue.
What about my rents?
Well, it's going to depend on a few different things, but the main indicator will be the history of your current rent. Most landlords only do one increase per year, if that. So if you've had a recent rent increase already, you probably won't see another one for at least 1 year. But if you've been staying in the same place for years and haven't seen a rent increase lately, you'll likely see one soon, assuming your landlord is fairly savvy and heartless.
It's a joke.
I'm not here to trash on landlords or tenants, I'm both. Running a rental is a business, and you can't blame a landlord for increasing rents to match the market. The same goes for Apple. No one is giving them a bunch of crap for raising the price of an iPhone every time. The same concept applies to landlords. Many of you are probably real estate investors looking for a general forecast of what will happen to rents this year. That's why I look at all this data. Similar to my housing prediction video, rents will likely vary significantly location to location. So this is what I'm looking at to try to predict what will happen with rent in my area, and you can do the same. First is the rent to price ratio. This compares the price of renting a property to the price of what that property could sell for. You may have heard of the 1% rule before when looking to buy a property. It's the same thing. To calculate this, you take what the property could rent for and divide it by how much the property could sell for, and then take that number as a percentage. In general, if that number is less than 1%, you're likely due for a rent increase pretty soon here. If that number is greater than 1%, there's a chance that your rent could continue to go down. The second metric you want to look at is vacancy rate. This is great because it measures the supply and demand of the rental market. A sudden increase in vacancy means that landlords are having trouble filling those empty spots that they have available. And whenever they have trouble doing that, they tend to decrease the prices. The opposite is true if you see a spike or a steady increase in the vacancy rate, like we've seen for the last 10 years. Rents have pretty much only gone up, so unless we see that spike in vacancy, we likely won't see a continuous decrease in rent. The last thing to look at is mortgage rates, and I know this is typically a number that you look at when buying a home, but it couldn't be more applicable right now. Mortgage rates are the conductor of the orchestra. They decide right now whether people are purchasing homes or renting homes because they have the biggest effect on affordability right now. When mortgage rates dropped suddenly in 2009, rental vacancy rates spiked shortly after that. Once rates start to come down, we'll likely see those rents also come down. The question of how much to charge for rent is a difficult one to answer, and millions of landlords are asking themselves it every year. My prediction of what will happen in the rental market for 2023 is that we'll generally see a slow increase, if not flat. There's a lot of things pushing rents upward and a lot of things pushing them downward, so it's really hard to know which one will have the largest effect. If I had to guess, I would say mortgage rates, because that is deciding where people are spending their money. Thanks for watching. Until next time, later.